So let's recap where we are kind of today. So today's very similar to yesterday, where we had mixed signals. So just like yesterday, we had direction up, then about launch at direction down. Very similar today. You can see. Oh, so I'm happy I'm on this computer. It's a lot faster. No issues with recording, which is great. Okay, right. Oof. Okay, so market open, which is a reference point for us. And then we get this directional move. What we want to see next is we want fair value gaps, bullish, to hold. It has to hold. If it doesn't hold, we just ignore them. We can still have them. So I still have them on the chart for reference because your fair value gap can turn into an inverted fair value gap. We then had this completely different direction down around lunchtime. I would say around 11:20ish, which for me is lunch. Although officially lunch is 12 to 1 p.m. But as you know, sometimes it starts early. So what are we looking for? Or what's the opportunity there? So just based on the session, the same principle applies. You identify your fair value gaps, you wait for touch into that fair value gap, and then you'll be looking for an entry. In general, my model, in general, my model requires just one directional move during the session. If you have multiple directional moves inside the same session, so in my case, AM, it invalidates the session, especially if you don't have follow through. Just like this, we just run up and then run down, back to where we opened, right? So you don't have follow through and then a retracement. So it invalidates that session, AM session. I've mentioned I prefer the AM session, but sometimes the PM will do what will do the business. So what I was saying before my recording completely crashed out was that we would look at the PM session, but the problem with the PM session, from my experience, is that once it's 2 p.m., which is where we are now, very little happens. Very little happens. But I said we'll watch and see price and see what it wants to do. Right. So this level here, we saw some buying. So this whole move was measured back down. So that's the 70 fib, right? Which meant that was the target we could go back to if we have a strong PM session. While we're recording, we've just got this. It looks like a displacement. We are on the 5 minutes, so this is the 5 minutes, and we're probably heading for that level there. So I was just saying in the previous video that this whole thing is just very confusing. This whole move is not really giving us an opportunity to really take an entry, take an entry where we want to take an entry. So what we're going to do now is see if we can get something before 4 p.m. Okay, so we have this move happening right now. This is 2:25. This is on 5 minutes. All right, guys. So this is a beautiful PM setup based on the framework. I haven't taken this trade, so I'm looking maybe for an extension. But this is what I talk about. This is in all the videos I make and everything you'll see, it's the same framework. So here you can see, just use this one, I'll make it bigger. So you can see what I talk about. First thing you look for is direction, which you have here. And you use the 930 as a reference point. So normally this is a starting point, but because we have this history, we can add it on. So you got that direction. And then what do? We wait for retracement back into the fair value gap, which is what we have here. Okay. This fair value gap overlaps not perfectly with the 70 fib. And because it overlaps, we take it a little bit more seriously. Okay, so once we have this overlap, let's get a fib. Let's run this. Okay. Let's just use this one for now. That overlaps with the 70 right there. So because it overlaps, we take it seriously. Then what I look for is a reversal. So this is still the 5 minutes, by the way. We have a candle that reverses there. And that's really all you need, a reversal. Sometimes price stops midpoint, sometimes it sweeps it, sometimes it stops just before. Every day is different. But the framework, the model is the same. And then what do? You take the trade for a measured move. What we have here, this low, this high. If you measure it from this low, is right here, 100. That's your target. And yet you're out the trade. The reason I didn't take this trade is because all of this happened during lunch. You can see this happened around 12:50. So during lunch, we had all of this. Right? And it was only right here, 1:30, that we came out of that launch sequence. But it was very unclear where exactly it really wanted to go, just because we had this fair value gap that it was bouncing off. So we had to clear this fair value gap first, which we did, but then price just ran. Okay, so then just wasn't quick enough. Then didn't really consider, okay, take the trade here. I didn't think about that at all. But this shows you exactly what repeats every day. Okay, so that's the main target. Now, the next potential target, sorry, I was using this for just a separate analysis. So the next target will be the 161 and potentially the 200. Okay, so that's where price can potentially extend to. But in order to get to the 161, which is around here, you're going to need an entry. Okay, so what I'm doing now is to see if I can get an entry right here. Which I'm going to go to the 2 minutes or 1 minute, and I'm looking for. All right, so this is, we're not coming back there, and it's kind of the same. I'm just looking for direction, then fair value gap, and then any fair value gaps that overlap. So there's a fair value gap here that overlaps a little bit here. It's the 1 minute, so it doesn't have to be super precise. All right, I'm just using the standard fair value gap but that could overlap with the 60. So this is only if I think it's going to extend. So a couple of more checks I need to do, and then make a decision. So just give me 1 second while I make those checks. All right, guys, I'm not extending this. We are now done for the PM. So by 3 p.m. for me, I'm not gonna chase this. I'm not gonna chase this. So yes, this is another day of no trade, but there is no rush to get into one. The key here is that price moves based on the model for me. And even if I miss a trade, I learn something from that day and I take that into the next day. So one of the things I took from today, so today's session, was that, and this actually happened to me on silver as well. When I see professional buying, so pre New York Open, sometimes I miss professional buying pre New York. And this is what it looks like, where the professionals are buying and everyone else is selling. But this sometimes happens pre New York Open. And I miss that. I always miss that because I'm not looking too far into the background, right? My focus is on first 8:30, then 9:30. And I would only really look into the background if something like jumps out at me. But this didn't jump out because this was happening on the lower time frames. This professional buying was happening on the 1 minute. Completely missed it. Completely missed it. So it's things like this that I learn, and I take that into kind of my next trading or the next year or the next session, and just add that to my knowledge base. But the model is the same. So I think that's it for this video. When I don't expect price to do anything now, even if it does, I'm not going to get involved. So I'll see you guys tomorrow for the next session. I hope we get a good trade tomorrow. I hope we get a good trade. So see you guys tomorrow.